Healthspace is an industry-leading software as a service company that provides digital solutions in the government tech space and is really helping to revolutionize the way that the government interacts with the private sector. They are currently working with more than 500 government agencies, and if you've been watching a lot of their press releases lately, then you know that this number continues to grow. So just quickly before I pass it over, I want to remind everyone there's a Q&A box at the bottom of the screen. So if you have any questions as we go along, if you just type it in the box, we'll get to it at the end of the presentation. And with that, I'm going to hand it over to Silas to talk about his background, run through the company, and why it's a really exciting time for Healthspace.
Awesome. Thank you, Victoria. And I know that there's some familiar faces in the crowd and as well as some new faces. And I do appreciate you all taking the time to come in and hear me present Healthspace. I always enjoy talking about the company and what it is we're doing. So by that way, a bit of background, especially for those who haven't heard the story before, I've spent my entire career, over 20 years, working in basically what we call GovTech. So government and technology, the intersection of those two. And that's what Healthspace is all about. And really at the core heart of what we are trying to do here at Healthspace is we are helping government operate more efficiently. And our platform has really revolutionized the way that that can take place and allowing these government agencies to adopt technology in a much more streamlined and more efficient fashion. So I got my start actually really early on in life. I taught myself software engineering when I was in high school. Took that as a springboard and launched into an opportunity to work at an enterprise software provider for health departments. So this was a software company called Digital Health Department that serviced health departments all across the US and Canada. And I rose in the ranks from junior developer all the way to VP of engineering, managing all of their R&D, product development, and everything in between. And I left that organization knowing that the handwriting was kind of on the wall in terms of it was not innovating as quickly as I would like to see this space go. So I ended up leaving that company and starting my own. I actually went the mobile first route, developed the very first iPad app of its kind for government, for sanitarians and health inspectors to go out into the field, conduct regulatory inspections, sanitary inspections like you would see in a restaurant and a health score. And then that technology I leveraged into a partnership, which turned into an acquisition with Healthspace. So Healthspace, having been around for longer than I've been with the company, got its start in the late 90s by a couple of former government folks who just had a passion for building a digital solution for health departments and government. What that led into was a very stable customer base, exceptional customer service, and a really good reputation in the local government market. But by the time I got here to the Healthspace, about 2016, the technology had well advanced in age. And so 2016 was a really critical juncture where we decided to go full into R&D, and we developed out the very first of its kind self-serve cloud platform, which I'll touch on. And during the first 2 years of my tenure here, really was in product development mode. In 2018, I became the CEO. And from that point forward is really when our growth story began. We hired a new sales team, went to task on developing new marketing materials, et cetera. So that's a little bit of a backstory in terms of how I got here and really where the passion lies, which is helping government operate more efficiently. And so with that, I'm going to go ahead and jump into the presentation. We have over 500 unique government agencies utilizing our software on any given day. And they utilize our software for every facet of their regulatory work. Now, what that means is whether they're regulating a private business and issuing a license, to inspecting a restaurant or a hotel for sanitary conditions, all the way to invoicing these businesses, because every part of a workflow comes with some sort of billing process, government issuing invoices to the private businesses that they regulate. All of that information, that vast amount of data is collected into our system. Now, one of the things about this slide that I'll touch on is that is really important is that our software is applicable to agencies of all types, both large and small. Just in this one slide alone, you have multiple customers that are represented from small rural counties that are 30, 40,000 in population size, all the way up to statewide deployments where millions of citizens are affected by the oversight of these regulatory agencies, these health departments that are our customers. Now, as I gave a little bit of in the preamble, the backstory of where Healthspace came from and the fact that we are a proven solutions provider to government and have been for some 20 years. In fact, one of the most impressive things about Healthspace, even predating me, is the fact that in our 20-year history, 20-plus year history, we have a 98% plus customer retention rate. That means we've only lost about 2 customers over 2 decades. And our growth is really just starting to tick up. Now, one of the things about Healthspace is that we are also a fully cloud-based solutions provider. All of our applications and our product line is fully cloud-based. And as I said at the beginning, our focus is on helping government operate more efficiently. Now, we also have talked a lot about health departments, but there's other areas of government that can benefit from our software that we're now pivoting into. Departments of agriculture, code enforcement, public health. There are over a dozen different unique agency types, and our goal is to be a ubiquitous cloud provider of product lines. The way that if you think of CRM, you're probably thinking of Salesforce. And we want to do the same thing within the government space and aim to, when you think I need a cloud solution as a government agency, you think Healthspace. The other way that we are also growing and creating additional revenue lines is through fee collection. I mentioned that every single one of our customers runs an accounting workflow, sends invoices through our system. So we are digitizing that payment collection, which I'll touch on more in just a moment. And then also providing solutions to the private industry that these health departments regulate, restaurants, hotels, lots of different private businesses that are actually impacted by the regulatory oversight of a health department. Now, one of the things that a lot of people will ask is, what is it like to work with government? There's a lot of different ideas and thoughts that can be conjured up, from bureaucracy to red tape to, what does it mean? Because government is such a vast entity. Really, government, at the end of the day, they come with a few problems and a very nuanced set of rules that they have to follow. And what I mean is that, one, they manage a vast amount of data. Everything that they do, whether it's issuing a permit, conducting an inspection, or in the instance of COVID-19, having to react to the situations on the ground from a health standpoint and collect additional information, they have to keep track of a lot of information. And it's important that their software be able to handle this vast amount of data and also be nimble when times change. The other thing that they desire and need is to be able to actually save time in their day-to-day workflows, not having to spend so much time double entering, collecting something on paper in the field and then going and entering it in some back office database. These government agencies really are a last line of defense in keeping communities and citizens safe from a health and safety aspect. So what they're really looking for is, one, online engagement, the ability to be able to publish just like a private sector company would, online e-commerce interactive portals that they can offer their services through. The government is a service provider in some ways. They regulate business, they offer services to citizens, and they need to be able to engage with their demographic in a way that a private business would. And all of this, they also want cloud solutions. Government thought as being kind of behind the times technology-wise. In the past couple of years, there's been a complete 180 from maybe on-premise type of solutions to government only wanting cloud-based solutions. Now, what that means for us in terms of our product line is that we have a product line that, one, as I mentioned, it's fully cloud-based, which in this particular market that we sell into, government, very few vendors offer anything cloud-based, let alone something that is fully cloud-based and self-serve. So our product line is comprised of 4 main areas: HEHS Cloud, which is our enterprise cloud solution. This is where everything kind of begins and ends. This is the full data storage, and where everybody who interacts with a health department on a daily basis, this is where all the data would live. HEHS Touch is our mobile application. This was my entrance into Healthspace. This was the mobile application, the iPad app that I developed prior to getting to Healthspace. That is meant for field inspectors to utilize. And then there's My Health Department, which is that portal targeted to the private industry who are regulated by health departments. And then we have HSPay, that fintech solution that I hinted to just a moment ago. And I'll go into each of these products in more detail. So HEHS Cloud, if you're going to remember one thing about it, it's the fact that it's self-serve. Self-serve in the government space, meaning the ability for a government agency to take the software And after it's delivered, make changes to it, whether large and complex or very, very small, from automating business rules to defining what data they actually need to collect on any given screen. All of that they can decide for themselves, and they can even set it up for themselves. This is a huge transformative thing within the government that virtually no other company is actually targeting or doing. Every single vendor in this space, and I know because I came from another enterprise provider that was once a competitor to Healthspace, that every single vendor in this space, when they go to deploy software for government, they look at it through a manual lens. And what I mean by that is that when they are setting up the software for any given customer, a software engineer has to be involved to code it to spec. Our software platform, HEHS Cloud, flips that paradigm on its head, and it puts all the power, all the decision making, and all the configuration into the hands of the users so that they can get a product faster that is exactly tailored to their needs, and they can do it with little to no intervention from us should they elect to. This is, again, one of those transformative things that is yet to hit the government space, and really the first to chart out to do this. HEHS Touch is fairly self-explanatory. It's an iPad app for inspectors to use. But one of the really key things about this is that all of our direct competitors, they do not offer any sort of mobile solution. We are really still the only ones that have a native iPad and Android and Windows tablet app that we are offering for field inspectors. The second thing about this is that while we are a cloud-based company and it's critically important to our success, HEHS Touch works offline, meaning they don't have to have an internet connection to utilize it. All of their pertinent data is stored locally, and then once they have an internet connection, it seamlessly connects up to the cloud. This is really important because government doesn't always have the luxury of being readily available to a Wi-Fi hotspot, or they might be in a rural part of a county where there's poor cell connectivity. So it's a really key selling point for our entire product line. Now, pivoting more into another segment of our product line, which is My Health Department. We call this the digital replacement for a government office. Think about anything you would have to do when interacting with the health department, whether it's filling out a new application to open up a business, whether it's following up on certain things that were found defective in your last inspection and you wanted to challenge them, ask questions about them, all the way down to paying for your invoices, the bills that you owe to the government. All of that information, all of that interaction, that data collection, that filling out of information, all of it now can reside in one central portal. And one of the big things about this is that as our footprint already is quite sizable and continues to grow, that this platform is kind of streamlined to be consistent across all of our customer bases. This is really important because whether you're a small mom and pop coffee shop owner in Memphis, Tennessee, or you own a series of franchise of McDonald's all across from Florida to Tennessee to Virginia, you can use one website, one portal to access all of your information, fill out all of your applications. This saves a lot of time. It creates a lot of efficiencies in the communication between government and private sector. And for us, what we are doing is we are building what we call a captive audience. A captive audience of business owners, citizens who are coming to this platform to register for an account, to interact with their government and regulatory bodies. And in utilizing this platform, what they're doing is they're consistently creating a connection with our portal, My Health Department, that we believe we can leverage for future revenue opportunities, whether it's premium features through the platform that we upcharge for, or even potentially ad revenue or corporate sponsorships. But this is right now one of the key drivers of sales in terms of what draws our core market, government agencies, to us. But it also is one of those things that has an ability to generate revenue in and of itself in the future. Now, one of the very exciting things about our business and working with government is that government doesn't really like to shop around for multiple vendors. And what I mean by that is when we become their cloud solutions provider, they store vast amounts of data with us, all the permitting, all the license, all the financial information. All of this means that they have all their data at their fingertips. They can publish it online if they so choose through My Health Department. But what does it mean when they need to actually collect the money for those invoices they send out? What we found is that the majority of the funds that they're collecting, and within our current customer base, that represents over $300 million a year US that is collected through these licensing and permitting fees. And the majority of that money is collected through paper means, check in the mail, cash in person. And so knowing that Government doesn't like to shop around. They would rather have one-stop shop solutions. And knowing that there's a huge opportunity to digitize all that money that they're collecting, we went out and we partnered with PayPal for the initial launch of our platform called HSMy Pay. It seamlessly bolts into my health department and HEHS Cloud, so that when they send out an invoice, instead of stuffing it in an envelope and snail mailing it and waiting for a paper check to come back, they can instantly digitally transmit that invoice through email or text message. And someone can click, the end user can click a link, securely pay for it with one smooth motion. And whether they have one invoice outstanding or a dozen, just takes one click, one checkout process, and they're done. All their funds are remitted back to the government. The government gets their money faster. And for our portion of it, because we're kind of the middleman in this payment process, we're able to take a fee anywhere in the neighborhood of a half to a full 1% of every dollar that flows through this pipe. Now, we already said that there's over 300 million that our current customers are collecting, and as I'll touch on in just a moment, our footprint continues to grow, where that $300 million a year will accelerate as we get into larger markets that we're selling into. So this represents a huge opportunity for us for revenue growth, for additional sticky elements that keep our customers kind of clinging to us. And I mean that in a very positive way, because we're continually innovating to bring them in, but also give them more of what they need. Now, one of the things that comes along with that, and the fact that we're constantly innovating, looking out for government and how we can help them operate more efficiently, is what we call HEHS Trace. HEHS Trace came about during the pandemic of 2020, COVID-19, that really rocked North America, starting in the late winter, early springtime. And we were especially close to this because our customers, these health departments, environmental health departments, were kind of becoming front line for this pandemic from a governmental standpoint. Now, one of the things I didn't touch on is that the majority of our customers right now are environmental health departments. Environmental health are those agencies that regulate private businesses from a health and safety aspect. Restaurants, hotels, long-term care facilities, over 20 different unique kinds of industries they regulate. Now, that is part of the environmental health side. Actually, health department, as most people know the term and the nomenclature, is actually several agencies under one umbrella term. There's public health, which manages the COVID-19 and disease surveillance. There's also clinical health and other facets of it. Now, public health are the ones that are managing the COVID-19 outbreak. And as the pandemic really took hold of the US and Canada, what we saw was our customers, these environmental health agencies, becoming increasingly distracted. And what we reached out to them to offer our assistance in any sort of way we could. And what we heard and what we were getting back as a very consistent response was, if you could help the public health agencies, our sister agency, if you will, really get control and automate contact tracing, it would give us a leg up in fighting this virus. So immediately, again, our platform, it's self-serve, very easy to configure. It doesn't take a large engineering effort to do something new with it. What we were able to do is deliver a fully automated contact tracing platform within HEHS Cloud that allows the health agencies who are conducting contact tracing to collect the people that they're going to be tracing through traditional means, which means phone calling. They are able to upload all that contact information and put it into our platform, and automatically a text and email alert is sent out with a unique and secure link that allows these health agencies to automate the very manual, laborious effort of contact tracing. One of the key significant things about this is that not only were we able to pivot in a time of real awful kind of despair within the country and the world with COVID-19, we were able to pivot into a new product area, but also a new marketplace. Public health has different decision makers, different budgets than environmental health. So we were able to open the door to what our long-term plan was anyway, to pivot our platform into other types of government agencies. And COVID-19 did that for us very naturally. Now, to go into more of the financial side of things, as I mentioned, 2016 was kind of that beginning, lighting a match. I brought my technology and my passion and vision for what government technology can mean for government to Healthspace, which had a stellar reputation in the marketplace. From 2016 to 18, we innovated. From 18 to 20, now 21, we've really been heads down to rebuild the company from the inside out. And you can kind of see that in our revenue growth. Our revenue growth has been fairly incremental and light over the past few years. And that's simply because we've been innovating and recreating ourselves, first technologically speaking, then business-wise, focusing in on what it is, are not only what we're selling, but how we're selling it. And really the growth and the embers that started to burn for our growth started in 2020. In January of last year, so just about 12 months ago now, we announced that we closed the city of San Francisco. That was a $1.6 million deal over 5 years. And that represented two things. One, a very sizable, in fact, the largest in the company's history, singular city-wide contract that we signed with their health department, $1.6 million. But also, it represented a stamp of approval on our platform, HS Cloud. Remember, we just launched it in 2018. It represented a stamp of approval on that in a way that very little else could. In fact, within just a couple of short months after that, in the springtime of last year in 2020, we announced a 5-year, $1 million deal with Orange County. And in fact, the majority of these deals you see here in red were closed sometime in 2020. And what that has done is we're starting to hear the murmurs, the whispers, and the momentum pick up that if it's good enough for the beating heart of Silicon Valley, if you will, San Francisco, then it's good enough for us. And not only is our outbound sales outreach getting stronger, we're now starting to field inbound leads where people are contacting us saying, hey, I've heard about you. And that really is represented, and I'm going to kind of jump slides here just because it's more, this is represented in our sales pipeline. Our sales pipeline as of right now, and it continues to grow, is over $18 million in near-term opportunity. This $18 million represents multi-year contracts of government agencies we've engaged with who are going to be going with us, or we believe will be going with us for their software solution. This is made up of a majority of environmental health departments. It doesn't even include some of the prospecting we've done into public health. And one of the more recent things that we'll talk about after we get through this presentation is some of the more exciting recent developments in terms of press releases. But our sales pipeline stands at over $18 million in near-term opportunity. And one of the key metrics that we keep an eye on in terms of how we grow, one of the KPIs is ARR, annual recurring revenue, as our most SaaS companies are valued mostly by this one metric. We closed 2020 with about $4 million in ARR under contract. We anticipate minimum doubling that by end of this year, this calendar year, 2021, to over $8 million in ARR under contract. And as of right now, we have two facets of ARR that we talk about: ARR live and ARR under contract. That means ARR that is under contract is at a sale that is closed, a customer that will begin paying their maintenance once they go live with the software. Every part of our software implementation, our software comes with an implementation phase, anywhere from 30 to 120 days. And so 2.7 million of that was live as at December of 2020. We anticipate over 5 million being live, all our customers being live, at least 5 million of that represented by the end of this year. Now, one of the slides that I kind of moved past that I'll quickly touch on is a natural question: how big can it all get? So you're talking about 4 million in ARR now, doubling that to 8 million by end of year. Our market segments represent $1 billion in spends. We all know that government spends a lot of money, and in IT solutions alone, for just in the U.S., state and local government spends over $100 billion in IT solutions. So we've broken that down into individual market segments. $120 million or more is available to us just in the environmental health segment every year in terms of ARR. Over 180 million in ARR for public health, which again, we just started to sell into the first part of 2020. Then you have departments of agriculture. One we didn't really touch on is code enforcement and others, where the field is massive in terms of the opportunity, multi-billion dollars worth of opportunity. And we're focusing in on individual market niches or segments at a time. And so one of the last things that I'll touch on is our capital structure. These are our basic shares outstanding. We just recently had an additional set of warrants that were exercised. So these numbers will be updated, but fully diluted, we're at 47 million. We did just complete a rollback, a share consolidation of 8-to-1 that completed sometime early in December, and that's reflected here. The next slide is just our management and directors, and I won't bore everybody with reading their bios, especially I do believe we have some good questions that have come in. So Victoria, I'll go ahead and turn it back over to you and we can start some Q&A.
So I have been having some questions come in through email. So the first one, can we just start and talk a little bit more about your competitors? So you mentioned your competitors not having a mobile option. Can you just elaborate a little bit more on what your core value proposition is versus your competitors and who you've really been pushing up against as you fight for this business?
Yeah, sure. So within the environmental health realm and really health departments in general, the two main competitors that we face are two companies by the name of Excella and Tyler Technologies. Both of them, have been in the industry as long as we have. And one of the interesting things about Tyler Technologies is both of these companies, I should say, are significantly larger than us. Tyler Technologies has over a $15 billion market cap. Excella is a privately held company, but worth somewhere in the neighborhood of about $1 billion. And so both of these companies are larger comparatively to us in both footprint and size, but they're not innovating in a way that the space needs to go, and they haven't really innovated in quite some time from a technological standpoint. Case in point is the iPad app. Neither one of these providers actually offers a native iPad app or Android app for their target customers. And it's imperative that government, especially field inspectors like health sanitarians, they need something ergonomic. They need something that works disconnected from the internet that can seamlessly synchronize back up to the cloud. That is something that really in this day and age I view as unequivocal. But still to this day, neither of them have developed some sort of native iPad solution. And the interesting thing about Tyler I'll touch on is that I mentioned I got my start at a company called Digital Health Department early on. They were actually acquired by Tyler Technologies. And that is really how both Tyler and Excella usually grow inorganically. They do acquisitions. They acquire either to get back some of the land grab that their competitors put against them or to get the technology that they need without innovating from within. So both Tyler and Excella have started to seed ground to us. I mentioned Orange County, one of the contracts we won. Both that and other customers like the state of Colorado, which we recently announced, were Excella customers, and they're leaving Excella because they have not innovated, and our technology platform is far superior. We're seeing that as a growing trend across the customers for both Excella and Tyler.
Okay, so then I guess just further onto that, so you mentioned that they don't do that much of their own R&D. So then in terms of your cloud-based offering and your mobile option, how difficult would it be for them to develop a similar product, or do they just not have the in-house expertise?
Well, it's a blend of options. One, technology like this doesn't come overnight. This platform, this thing that I've envisioned and started really a decade ago, HEHS Cloud, really is something that took many years of really hard knocks learning. And I myself, coupled with numerous members of our team, we have hundreds of years combined experience selling into government and creating digital solutions for them. And that really showcases in our platform. We've effectively taken hundreds of years of technological experience and whittled it down into an algorithm, so to speak, that is our platform. So it's not something that could be easily replaced and couldn't be or replicated, I should say, quickly. And then there's the time and the cost. So these companies are not notorious for spending a lot of money on R&D. They typically acquire to get their way into it.
Right. And then, so working with the government can't always be easy. What are some of the layers of friction you face when dealing with them, and how do you guys solve these issues?
Well, I would say that I thoroughly enjoy working with government. Yes, it does introduce a unique set of challenges, and mostly because a lot of people don't realize just how many laws and regulations they have to either follow or regulate by. And so what that really means is it introduces challenges, puzzles to solve that we take and we create a platform that can actually solve them for them. And what I mean by that is, a lot of times when a health department, you could take two health departments that are neighboring cities, In fact, the perfect example is Dallas and Fort Worth. They're neighboring cities within the same metropolitan area in Texas, but they're both going to do things slightly different. They can both be conducting a food inspection, but they're going to have different ways to look at it, different ways that they're going to go out and conduct that workflow, and to deliver a solution that could precisely accomplish the different ways that both of those agencies, though very similar, almost mirrored of each other in terms of the way that they regulate, but how they're going to go out and do that work really requires a lot of nuances. And so being able to deliver a solution that can satiate both city of Fort Worth and a Dallas, or really a city of San Francisco and a state of Florida, and being able to deliver a solution that is one platform that can actually rise to the occasion to solve the problems for varying government agencies across different geographic spectrums. It is one of those things that's actually extremely gratifying. Working with government, there's really not a lot of impediments in terms of what I would consider a drawback. I thoroughly enjoy the work. And one thing I will say, and I tell my team this all the time, is that the work that these agencies are doing, they're protecting citizens, they're regulating businesses and restaurants to protect against foodborne illness, COVID-19, many things that have a real impact in this world. And our platform gets to be a part of helping these agencies do it more efficiently. So I don't know if that really hit in on the exact question that was being answered, Victoria, but I don't really see any negatives. I think that was part of the question.
No, that's great. And then how does your pricing model work, with each of the governments? Can you walk through that a little bit? And then in terms of how much pricing power you guys have in dealing with them, can you talk about that a little bit as well?
Sure. So our pricing is typically done on a per user basis. And we charge anywhere from $1,500 to $1,800 a year per user. And that will vary based upon typically the size of the agency. If someone's going to come in and sign a contract for 500 users, obviously they're going to get some sort of bulk discount, but typically about $1,500 per user per year. Now, when we engage with these government agencies, the way that we price it is that they'll tell us that they have 100 employees or 100 users that are going to use the system. We'll give them a firm quote of, basically $150,000 a year to utilize the software. However, what we've recently done is that's the price tag that they see, but we've started to increase that year over year. So typically this is 6 to 8% increase year over year. So first year is 150, then it increases 6% compounded over the life of the contract. And all of our contracts are multi-year. The average and pretty much the most standard one is 5-year agreements. And the other way that we generate revenue and the way that our fees are structured is we do what we call professional services fees. These are one-time fees that we charge at the start of a contract to basically recoup the time that it takes to set up the software. We hit home a lot on how it's easy to use. You can set it up yourself. But these government agencies aren't always equipped to know the best way to set it up. And so we guide them through that process. We convert their historical information, their data, into our platform so they can hit the ground running with all of their historical information. And so for that, we typically charge a professional services fee that is in the range of 1.5 to 2 times whatever we're going to charge them per year. So in the instance of the example I just used, $150,000 a year to use the software, we would probably charge them $200,000 to $300,000 in professional services to implement it.
Okay. So we've had quite a few questions come in just asking about, some of your recent contract wins and as well as the sales pipeline. So I'm just going to work my way through them in a way that hopefully flows. So let's just start with, we've seen quite a few new contract wins. Can you talk about how scalable your business is to meet the significant increase in demand you are seeing?
So our business, everybody would like to say this, we're infinitely scalable, right? But our platform truly is. And we're able to meet the needs of these customers through a very robust way through our platform. But every single one of these customers, the big thing to keep in mind, as I just touched on, is that it does require an implementation. And we're getting it down to where, we've gone through a heavy growth phase. About a year and a half ago, give or take, we were at about 18, 20 employees. Today, we're at 60 or just thereabout. And that means that we've scaled up our personnel staff, both to work on R&D, but also to work with our customers, one of the most critical aspects of it. So we're extremely scalable from a platform standpoint, and we've gotten it down to a near science to where even the implementation phase, though it does require us dedicating resources, personnel, team members to each individual customer, we've gotten it down to where we know exactly how much we need to dedicate, so that we're hiring ahead of the growth curve, so that as soon as a customer comes in, we can get them in the door. And think of it like a pit stop at like a NASCAR race. You just come in there, you're going to change a set of tires, you know exactly what you're going to do and how you're going to do it, and we time it to the point that we know how many resources we need. So we've seen a big growth spurt in terms of hiring, but that won't continue in perpetuity. We won't just hire in infinitum forever. We're hitting that point where we know exactly how much we need, regardless if our customer growth doubles, 10x's, or even 100x's. We know how to get there and scale it without having to incur an extreme amount of additional cost.
And then how much confidence do you guys have in your sales pipeline? Would you be able to provide an update on the status of contract closures that were expected in 2020, and then what your outlook is on current and future contract closures?
Yeah, absolutely. So as I've said many a times, you know, the holiday season is one of those tricky things in any business, but especially government, to get the last little signatures you need. And that's always what closing business for Healthspace means is you have to get a couple of additional signatures of someone who may not be directly involved in the project, but it goes through its proper processes within government. And we've seen that take as little as a couple of business days to a couple of weeks to a couple of months, varying on the customers. So there's no consistency in terms of how that plays out. The end of year, we definitely had a couple of contracts where it was just waiting on one signature, and you know it sat for a couple of weeks, and then the holidays hit, and you know, it looked like everything was going to close, and then, you know, it gets pushed into the new year, which is, you know, only a few weeks by the stretch of, you know, how events play out in life. But those are due to any ones that were in 2020, you know, Q4, especially late Q4, are imminent and pretty much any day now.
Okay, and then how much? Oh, sorry.
Sorry. No, I think there's another question in there, Victoria, about the confidence of the sales pipeline. The sales pipeline, highly confident. So our sales pipeline continues to grow, and that $18 million is not fixed. It's one of the ones that we've talked about several times over various presentations, but it does continue to grow underneath the surface. And right now, our confidence is extremely high that a lot of that actually should close in the first half of the year. And what we're seeing is a lot of deals start to really gain traction that we haven't included in our sales pipeline number, but that are starting to gain traction that we believe will close in the latter half of 2021. So high degree of confidence, in short.
How much of your current pipeline is for agriculture and code enforcement? And then also, how much of the pipeline is for the public health sector? And with the recent win, are they going to serve to be a reference for any potential pipeline within the public health vertical?
Good questions. So our sales pipeline is about 95% environmental health. So a very small amount would be represented by either agriculture, remembering all the terms, agriculture or public health. And there's really none that we're forecasting in our sales pipeline as of right now with code enforcement. It being a new agency type that you really need to get the first adopter in the door. It's one that we did actually have on the line pre-COVID, but with COVID hitting, we were able to kind of set aside our ambitions to get into code enforcement in 2020, and we got into public health. And public health is showing a lot of traction going into 2021, especially with the incoming administration change. We do believe that there's already ample amounts of federal funding, but we think that that will precipitously increase. So we think that public health will increase rapidly, but we're not forecasting anything in our sales pipeline just now. But the other thing that we just announced was clinical health, another avenue. So while code enforcement may not pick up at the same rate that we had hoped, usually another door of opportunity opens. And we just announced Portage County, Ohio, which is going to be using us for clinical data. which is clinical data is just like a doctor's office. These health departments, these clinical departments, they actually function as a normal doctor's office, usually for the more impoverished communities. And these doctor's offices, if you will, these clinical agencies have needs for electronic medical record tracking. And they're going to be utilizing us for their electronic medical record, better known as EMR, typically in the SaaS space, where they're going to be utilizing us as their EMR. It's a huge leap forward in terms of a new adoption into a new vertical. So I say that to say, we have our eye on code enforcement. We are pushing into agriculture. But typically, as the world works, you get opportunities that you didn't fully anticipate. So our goal is to get into new agencies and new verticals. And we are now landing into clinical health, which necessarily wasn't on our radar, but the doors of opportunity have really opened up, mainly because of COVID and our entrance into public health.
And then we've seen some new contracts adopt HSPay. Do you have a sense of the uptake of this product feature from the end users?
So we are seeing a surge of demand for HSPay. And I think that the obvious reasons most people could imagine is one, with COVID-19, offices are at low capacity. There's more demand for just generally speaking across the world, digital solutions, and payments is becoming one of those, especially for government. So we're going to start to see, basically end of Q1 into Q2 of this year, kind of a rapid adoption of HSPay. We are accelerating development. We have brought on additional engineering resources, a lot more engineering resources to ensure that we not just get this platform delivered for the immediate customers, but we get it to the point that it's scalable in the way that HS Cloud is natively scalable to not just be adoptable across 2, 3, 4 customers, but we could do it across dozens. So the focus right now is just getting the first half dozen or so that have committed to it across the finish line over the next quarter. And then what we're going to be focusing on for the duration of the rest of this year and really beyond is getting this scalable to where we can implement it across hundreds of departments.
And then, so you have a goal of reaching 10 million in annual recurring revenue within 12 to 18 months. Over the past 6 months, you've referenced a large pipelines of deals and contract wins. So can you maybe just help people see the buildup from some of the announcements that you guys have made to hit that $10 million figure that you guys have put out?
Yeah, absolutely. So our growth rate is really on track for about that 10 million. So we exited, 2020, which by all means should have been a setback year for most businesses, was. But we were able to grow through it. We exited with just over 4 million in ARR. And we're entering 2021 with a sales pipeline that should increase that pretty healthily over the first 2 quarters. That puts us on a path that, as the sales pipeline, as we've talked about, and I said that there's a lot of deals that are gaining traction for the latter half of the year. If everything like that sticks, then we will absolutely, we forecast being able to excel the 8 million mark by end of year. And so one of those things that, in terms of helping people understand, we do these announcements and you see that it's 300,000 here, 1 million there, 500,000 there. Everything that we do is building towards a larger kind of inflection point to where it's not just higher deal size, larger deal size, from 500,000 to 1 million. It's more about velocity and volume and the ability to close more sales over time. 2020 showcased that. We closed more sales in 2020 than we ever have in the company's history. In fact, nearly doubled it. And that's a record for us, doubling our sales growth. But now we're at a point where we can actually double that again. So the thing that I would point to is that each deal we close, you got to keep an eye on what is around that particular geographic region, a singular county that we may sell that may be a few $100,000 in contract size. The way that government typically works is there's a follow-on effect, and you'll typically start to see a domino effect of the surrounding counties, cities, and regions also look to adopt Healthspace. So I don't think that I lost half of the question in there. So if there was anything that I might have missed, Victoria, you can remind me.
No, I think that's okay. And then on the contact tracing side, so can you explain how the contracts work? And if COVID goes away, do you still expect this to be a reoccurring revenue stream?
Contact tracing for us opened up a door. We are not a contact tracing company, or we don't aim to be a contact tracing company. We are a solutions provider to government. Whatever we can do with our platform, with our team to deliver solutions that help government operate more efficiently, that's our aim and that's our goal. It just so happens that the flavor of 2020 was contact tracing. And the beauty of it is allowed us to establish reputation and relationships within the public health space. Several of those relationships actually were revenue generating, actually numerous of them, state of Hawaii being one of them. They pay us $30,000 a year for the contact tracing platform. However, as we've talked with many agencies, is that even if contact tracing goes away, what they're seeing is that this data management platform, HS Cloud, is far more robust than just contact tracing, and they want to utilize it. They need to utilize it beyond. Now, the focus and what's really consuming all of their time is COVID-19. But once they're able to get past that, rise above the stress, the next on the list is probably the vaccine and needing to track data that goes along with vaccine disbursement. And so we do believe, and we're very confident that COVID-19 can literally disappear tomorrow. But the relationships that we've built, the reputation we've built, is that this is a platform that is multifaceted, multi-purposed, and regardless of the underlying data they have to manage, contact tracing, health inspections, it doesn't matter. This is the preferred platform for government, and that's our ultimate mission.
So you've mentioned that Tyler and Excella generally grow inorganically and look at M&A, whether to acquire new technology or whatnot. So what are some of the companies that are out there that you think would be interesting that they might look to from an M&A standpoint? And then how does Healthspace view M&A internally for your own company?
So I really couldn't comment on what Tyler or Excella might look at from an M&A standpoint. I'll leave that to their M&A team. But I will say that it's usually just high level. It's either going to be probably market penetration. So the more land you grab in a large player's backyard, typically the more on the radar you get. And they're probably going to look for acquisitions that have landed on their radar, AKA started to take ground from them. The other would be probably technology. And for us, it's going to be similar. We are actually, in the process of talking, at a high level of what does M&A look like for Healthspace. And it's going to be one of two things. It's going to be technological adoption, something that gets us into a new facet of technology and in a new way that doesn't natively just come with our HS Cloud platform already. So accelerate product development, or it's going to be getting us deeper into an existing market vertical, whether it be clinical health or public health, something that through acquisition, we could acquire a customer base and get them onto our HS Cloud faster than we could organically. So that's really the two primary lenses through which we look at potential M&A activity for Healthspace, whether that's near in the future or not.
And then what types of multiples do companies in your space typically go for, or what does that usually look like?
The interesting thing I would say is that there's not too many companies in our vertical. Tyler Technologies, they're publicly listed, they're doing about $1 billion in revenue, trading about at 15. Actually, it seems like it keeps going up. Last time I checked, I think it was 16 billion. So the 16x times revenue. But you could typically see that regardless of the targeted industry, ours being government, that growing SaaS companies, especially ones that have a compelling solution, a differentiating factor than the competition, which we do, is that you're going to see, based upon your growth trajectory, historical and forward-looking, you're going to see anywhere from a 6 to 8 times multiple on the low side to, we've all seen the stories and can point to companies where it's 15, 20, 30x recurring revenue. So I'm not here to give any sort of specific guidance, but those are the type of comparables we are seeing out there.
Okay, so moving away from M&A, the majority of the deals that you guys have announced have been in the US. Do you anticipate Healthspace further diversifying into the Canadian market? And what roadblocks have you seen in terms of trying to expand within Canada, if any?
We've not seen any impediments to expanding within Canada. We've seen basically just some slowdowns. So we actually announced that Vancouver Island, that was in the Q4 of last year. We announced that was actually the very first adopter of our cloud solutions within Canada. And what we're seeing now is a uptick in sales activity and demand coming north of the border. So we have not forsaken Canada in terms of any sort of prospecting or sales activity, but they were heavily mired, both from provincial standpoint to a federal standpoint. Canada was heavily mired in the COVID-19 pandemic, as the US was. However, because of just the differing natures of how legislation and government works in the two different countries, it was just done in such a way that between not being able to travel in person and visit with the customers, and the sheer just nature of all-consuming aspects of COVID-19, that things went a little bit on hiatus with sales development in Canada for 2020. But we're really starting to see a resurgence. Actually, we started to see a resurgence late in the year, and we're starting to see that pick up. So we anticipate more sales coming out of Canada in the very near term.
And then a question that just came in. So you mentioned that contact tracing and COVID-19 was one opportunity and the vaccine may be another. Have you guys been looking into helping governments manage the vaccine rollout, or have you had any conversations to that regard?
High level, nothing specific, at least that I can comment on. But again, our role in everything is helping the flow of data, helping the flow of manage of information. So again, whether a piece of information that a government body may collect and need to track and report on, whatever the underlying asset or entity that they are doing, we want to be there to help. And so COVID-19 vaccine has been in conversation as one of those things that our platform can help track and report on, but we're not forecasting anything specific at this time, and that at least I can say right now.
And then can you just update everyone on your cash position? You guys closed a financing late last year. What do you see your funding needs looking like going forward? Will you be able to manage this internally, or do you see yourselves having to, go back out to the markets?
Yeah, as of right now, our cash position is very healthy. In fact, the healthiest it's ever been in the company's history. I'm very pleased to report that. And so, we just closed a financing where we have about 6 million cash on hand. But our cash collection in terms of revenue, our AR, is over $1 million at this point in terms of what we expect near term. So we really don't expect to be really dipping into a lot of the money, the cash that we raised in the near term, as we can utilize that for very strategic purposes. So our cash position is extremely healthy. Our revenue collection is accelerating. And so there's no near-term need for a cash, day-to-day cash position. No need to go back to markets just to keep company operations afloat.
Okay. And I'm just checking. So I think that's all of the questions, and we're just coming up to the hour mark. So let's end it there. Silas, I want to thank you so much for taking the time. Healthspace is definitely a story that, at Adelaide, we view as extremely compelling. We think the stock price is going to continue to do well. The growth is evident, and the demand within the new verticals. It's really exciting to see what you guys are going to accomplish. We like the visibility that comes from, your sales pipeline and your reoccurring revenue component, and also the stickiness of your clients. We're really looking forward to seeing what you guys are going to do in 2021. And I'm not sure if you just want to end it with a few more words to everyone or anything.
Yeah, I would actually just like to thank everybody for attending, both the new and old faces, so to speak. Obviously, as I say always, I take very seriously anybody who is interested and actually becomes a shareholder of Healthspace. So take the investment very seriously. 2021 is going to be the best year, we believe, yet for the company. We have a lot of exciting growth, really to the point that we're going to get into new verticals, as we've already demonstrated just in January, getting into clinical. But really our growth into the existing environmental health segment is really going to, we believe, accelerate rapidly. And so we intend to have another record-setting year this year. And thank you all for your consideration and your time. Thank you so much.
Okay, thank you so much, Silas. And thank you everyone for joining.